Good morning. Good morning. My name is Valerie Leonard. I am the founder of nonprofit Utopia. I just want to say thank you so much for joining us this morning. We are going to focus for the next 4 weeks on all things Form 990. We realize that this is the end of a fiscal year for a number of you, the end of June 30th was your fiscal year end. And when you come to your fiscal year end, usually you're focused on all sorts of year end activities. You are closing your books, you're completing Form 990. And typically, when we think about Form 990, we are focused on the financial disclosure. And truthfully speaking, most of us are not in the financial field, so we're just trying to get a document done so that we can have something for the IRS so they won't be hounding us for the rest of the year, threatening to take away our tax exempt status. But I'm here to tell you that there's so much more to the Form 990. There's so much more that you can get out of it. And again, for the next few weeks, we're going to be focusing on different things you can get from your Form 990 beyond just the reporting. All right, so today we're going to focus on what Form 990 says when you're not around. Because remember, in your absence, the only thing, right, that a funder, a funder or people who are interested in your organization have to go on is, things like your website, things like your Form 990, etc. You're not going to be around to defend yourself. You're not going to be around to answer any questions. You're not going to be around to explain things that look a little out of whack, right? So I'm here to tell you, what the form looks like and how you can make the most of it so that you can present yourselves in the best fashion when you're not around. All right. So at this point, I'm going to share my screen and then we'll walk through. If you have any questions, feel free to post them in the comment section. And then when I'm done, we will also have Q&A. All right. So just one moment while I share the screen. All right. So today's topic is what do you do when or what Form 990 says when you're not around. And if you can just bear with me, I just want to make sure that that you can see my screen. All right. Um, okay. All right, so this is our presentation. What Form 990 says when you're not around. And my question to you is, if your Form 990 could talk, what would it say, right? What would it say about you and your organization? Would it tell a story of impact, talking about all the great work that you're doing? Will it tell a story of intrigue, make you wondering, who's minding the store, right? Are they shady characters or can they be trusted? Or is it somewhere in between? And for most of us, it's somewhere in between. And hopefully, after you look at this presentation, you'll get a good sense for how you can present your story in the best light. All right. So, we're going to help you read and interpret Form 990. We're going to help you understand how the IRS and funders and even other interested people use the information that they find in Form 990 to make decisions. We're going to show you what to look for in terms of red flags. And if you have any issues, we're going to show you how you can take corrective action. We're also going to show you how to leverage the relationship between financial disclosure and fundraising. And remember, your Form 990 is a disclosure form, it's not a tax return. And then we're going to show you how to use your financial disclosure process as an opportunity for fundraising. And before we go any further, I just want to acknowledge where I get the information from. It comes from my experience, it comes from the IRS, but then there are two other documents. One is Telling the Not for Profit Story through Form 990 by Maureen Butler. She's a CPA and a PhD, so I think she knows a little bit about what she's talking about. Brian Butler, he's with the Journal of Accountancy, and this article was from December 1st, 2016. And you should know that accounting doesn't change that much over the years, so this information is still relevant. The second document is How to Read the IRS Form 90 based on the 2010 990 form. And the form we're going through is much more recent than that. It's, I think, about a year or so out. All right, and that was by Peter Swords, and the contributors are Daniel Myers, Victoria Bjorklund, and Jonathan Small. All right, they're the Nonprofit Coordinating Committee of New York. Again, so these articles come from teams of experts. All right, so here is a picture of Form 990. And again, the information is more recent than this picture, but it's just here for pictorial purposes. The Form 990, as you know, as a tax exempt organization, you don't have to file income taxes, but in lieu of income taxes, you need to do an overabundance, I think, in my mind, of disclosure, right? In exchange for that tax exempt status, you're going to have to be more transparent. And when we talk about transparency, we're talking about not only what you do, but how you do it and why you do it, right? So this Form 990 is going to provide a much higher level of transparency than your 1040 would as a private payer. Your Form 990s are due 5.5 months after your fiscal year end. So if your fiscal year end is June 30th, you have until October 15th to file it, and if your fiscal year end is in August, you have 5.5 months after that, and so on and so forth. And every nonprofit, I don't care if you don't have a budget, if you don't have a pot to hiss in, everybody who has a nonprofit organization needs to file. If you don't file Form 990 for 3 years in a row, then the IRS can automatically take away your tax exempt status. So if you have to file the postcard, if you file the EZ form, the regular form, or if you're a public foundation, you have to do the Form 990. So here is a list of people who read the Form 990, as well as why. And I will add to that list people like me. One, I'm a busybody, so to speak, stuff like this, combination busybody and data geek. So 990s kind of fascinate me. So we need to add my name to the list. And busybodies, we want to really understand what's going on with nonprofits, and how we can help them. So the first name on this list is donors and grantors. They're going to be looking at your Form 990s to make sure that, you're a good investment. And if you're a good investment, how strong is your stewardship? So they want to look at things like how your mission aligns with your core values and your goals. And you're going to state your core values and your goals. And a word of caution, whatever your stated goals and objectives are, let's hope that your Form 990, the information in that Form 990, lines up with your core values and goals, right? They're also looking at, what is your governance like? When they do the applications, they typically ask you for a list of board members. What they will do also is ask you for your Form 990, and there's a section, and we'll talk about it, that speaks to governance. They're also looking to assess your program accomplishments and how they align with your missions. Your board members need to be very interested in your Form 90s because at the end of the day, they're fiscally and legally responsible for everything that goes on, right? So they're looking to make sure that the mission aligns with values. They're looking to evaluate governance structures, policies, and compliance, and making sure that the organization is in compliance with all regulations and making sure that the organization is indeed a strong steward. Um, Creditors and bankers are very interested, because they're looking at things, they're looking not only at your financial performance, but they're looking at your governance structure as well. They're looking at your policies and your compliance. Vendors and service providers. So people that are looking to contract with you, and let's include employees. They may or may not be contract employees, but people who are looking to work for you in any way, they're going to look at whether the service offerings meet the non-for-profit needs. So vendors might look at your Form 990s to figure out, well, how should I pitch to you? They might use the information to get a sense for how much you might pay others, right? But then they also might want to understand, whether or not you even engage others, like themselves. External evaluators, they're going to be looking at governance structure, policy, and compliance. And then they're going to be using it to assess program accomplishments and alignment with mission. So there are a lot of different actors who are looking at Form 990, and they really want to get in your business, not because they want to get you per se, but they really want to understand how you do business. And then, there are the watchdog groups who are looking at organizations trying to determine, are they good stewards? Are they not only good stewards, but are they good neighbors? There are other organizations who are looking at you to get a sense for whether or not you are a good partner. And if you are a good fit, what do you bring to the table? Are there any capacity issues that they should be aware of and how they might help you? So there are a bunch of people, like I said, who are interested in Form 990. So this screenshot here, this is the top of a Form 990. Here they're just looking at very basic information, where you're located and indicating whether or not it's an address change, whether or not this is an amended return, wondering whether or not you already have your tax exempt status or if the application is pending. All right, so after we pass that information box, we're looking at part one. And part one is basically a summary of the whole application. So there will be questions on there, obviously, questions around finances. So they're looking at your revenues and expenses. And then there are also questions around your governance. But note too that these are just summary responses, and then they will dig into the weeds further on in the application. And I like to call the part one summary a snapshot of the organization. All right. And this is a good place to go and get information, if you're comparing yourself to other organizations just at a glance. All right. Part two is the signature block. All right. This Form 990 needs to be signed by an officer, right? It's really, really important that an officer signs off, because the officer needs to be doing, their legal duty of making sure the organization is fiscally sound. So the IRS is looking for evidence that someone who's in charge has read this form and understands how it's prepared. And then you have the paid preparer. If you got someone else to do it, they want to know who that person is. So if there are any questions, not only are they going to ask you as an officer of the organization. So that could be your board chair, that could be your board um, treasurer, it could be your secretary, it could be the executive director, it could be your CFO. So whoever that officer is, they want that person's signature, as well as, if it's applicable, the firm or the individual that prepared it. All right, part 3, statement of programs and services. Now, here is an area where you can really ramp up your marketing, and we'll talk more about that next week. Typically I've seen organizations just answer the question, in the briefest possible ways, and then also I've seen accountants answer these questions too. And an accountant is not going to be the same type of storyteller as your CEO, right, would be. So I would recommend too in this area, and we'll talk about this more next week when talking about marketing, that you not just answer the question, how you're going to how you're describing your services, but you really want to focus here on what you've accomplished, what has been your impact. And when we talk about impact, we're looking at short term as well as medium term and long term change to your community, to the people you're serving. So they're going to want this kind of information for the top 3 programs in your organization. They're going to be looking at the expenses as well as the revenue. So you'll have the blank for, how much money are you spending on this program, and what are the grants and what are the revenues. So when we look at grants versus revenue, grants obviously are those monies that are coming in from foundations or government entities, et cetera, et cetera. But when we look at revenue, we're looking at, if you sold any services, are you, for example, if you're a medical organization, how much have you been able to bill for and come into the organization, right? So they're going to be looking at the money that goes out, the money that comes in, and then these lines below will give you an opportunity to describe what the program is, what your goals are, what your objectives are, what you've been able to accomplish, what your impact has been, right? And the reader, the objective reader, is going to look at this and they're going to say, okay, um, that was money well spent. Hopefully, if you share the right information in the right way. And then what they're also going to be looking at is whether or not your programs are in alignment with your stated mission. So if your mission speaks to, let's say, you want to improve children's performance in school, their academic performance. If that is your mission, but your programs are related to housing development, either you have a problem with mission creep or you're going to use this as an opportunity to explain how this program with affordable housing is instrumental in making sure that the children have stronger academic performance. All right, so what are some of the red flags that people are looking for? They want to find out, one, whether or not you have a mission or not, right? And then they want to see if you have a mission, if you have a purpose, if everything in that form, right, is that in alignment? Does it support what it is you're trying to do? Or does it seem to be something a little bit out of whack? And then also, they want to get a sense too for, whether or not the money that you're spending on programs is actually sufficient to support that program. Are you spending an inordinate amount of money on admin and fundraising as opposed to investing in the community through that program? All right. So all right. Yeah, I'm sorry. I got way ahead of myself. All right. So the next section is part 4. That is a checklist of required schedules. And here's a bunch of questions, right? And depending on how you answer them, that's going to determine what other supporting schedules you have to complete. And when I say supporting schedules, you have the main body of the 990, but then there are other schedules. There might be a Schedule O that gives you an opportunity to explain some things that are not apparently um, that are not obvious here, right? So based on your answers, and if you're hospitals, you have to do schedules, blah, blah, blah. It'll determine whether or not you have to even do other schedules. And if you have to do other schedules, what those schedules might be. Part 5, statements regarding other IRS filings and tax compliance. So as you may or may not know, the government keeps a database. Every government agency keeps a database of all of the people that they're dealing with, right? Any filings that you do with one government entity or one government department, is accessible, by other areas of the government. So if you, for example, have payroll, so the information that you provide the IRS as it relates to payroll, that's one department of the IRS, right? So any information you're giving them on payroll, they're going to cross reference that with the information found on your Form 990. And if there are any discrepancies, they might contact you to ask for clarification. All right. So the information here is, collected, again, put in a centralized database that is accessible from several government entities, and they can check on it. All right, the next section is part 4. That's governance, management, and disclosure. And this is really, really important. And as you saw from the list originally, almost every stakeholder that reads your Form 990, whether it's a funder or banker, the government, they want to understand how your organization is being governed. So when I speak to governed, we're looking at, what's happening at the board level, right? What decisions are being made, what stewardship is being exercised. Are people living up to their fiduciary responsibility, right? When we speak to management, we're speaking to the people, from the executive director on down. We're looking at staff and how they manage the organization. And the questions asked here are going to give insight as to how well the organization is governed, how well the organization is managed. So they'll be looking at things like, how many board members do you have? How many of them vote, right? Did you make any significant changes in your governing documents? So when we look at governing documents, we're looking at documents like your bylaws, like your articles of incorporation. Did for any reason you need to amend them? um, what documents are you using to support the decision making? So things like minutes and resolutions. So there's opportunities for you to answer questions about those types of activities. So once the reader looks at this, and even you as a manager of your organization, you can look at this, and we'll talk about this in about 3 weeks, right? You can look at this and determine how well managed your organization is and make appropriate adjustments. People from the outside looking in, they can get a sense for how independent your board members are. There's some organizations, we've seen, have family members or, friends and close business associates and stuff like that. So the IRS is keen to ask questions that help them to get at the relationships among the board members. Um, there are also questions that help you determine whether or not there are outsiders who can influence the board, and if so, what type of influence they may have. Um, Again, whether or not your board has changed bylaws, whether you kept minutes for the last year, and all of that good stuff. So you can see that this is a really good place to determine, you know, how well an organization is managed. All right, so part 6, section B, here's a chance where you talk about the policies that you have, in effect. So they're going to ask you questions. One, do you have other branches? Do you have other chapters? And then they want to know that you're actually filing for other organizations and all of those types of things, right? They want to ask questions like, do you have a document retention policy? They want to make sure that, your permanent records, you're keeping them in one place. They want to make sure, too, that there are other records that you might have to keep 5 years, that you're holding those, you know, in place as well. So, again, it's a good way for you to better understand, the checks and balances within your system. All right, and I do apologize. My computer is a little sensitive. Sometimes I hold the button too long and we might advance too far. All right, so what can we learn from part 6, section B? You can get a sense for whether the board has policies and practices. So are you following best practices for good governance? So they'll be asking you questions around whistleblower policies, conflict of interest, whether or not all members had a chance to review Form 990. See, they want to avoid situations where you have one or two board members or members of staff who hoard all the information and they're not sharing it with others. Why do they want to know that? Because it doesn't matter if you're kept in the dark, if you're on the board, if there's one or two rogue board members, if something happens, the whole board is responsible. And this information here is a way to nudge you as a nonprofit professional to make sure that all of your board members are reading what's in the Form 990, making sure they understand what's in it, make sure they ask intelligent questions about it. They want to make sure that whistleblowers are protected. So there's an indication as to whether or not you have a whistleblower policy. And then they are also interested in procedures for determining compensation for the CEO. So, what are the procedures not only for determining the compensation, but how do you manage this person? All right, so part 6, section C, there's a disclosure section. So, there, questions that um, tell you, how are you disclosing this information and where are you disclosing it? So question 17 speaks to, where you can find a copy, what states are you sharing this with, for those of you who operate in more than one state. And then you should also be aware that you are required to do, to make your Form 1023 available to the public. So, and when we say Form 1023, that's the application that you use to actually get your tax exempt status. There's a lot of really good information on Form 1023 that, that gives us insights as to, what you were thinking when you created the organization. So that is a permanent record. You need to make sure it's publicly available. You can provide access at your office, allow people to come in and inspect the record. You can post it on your website so you don't even have to be bothered with people, etc. You can post it on another website. You can share it upon request, or there are other ways. So, however you choose to disclose it, the IRS is interested in knowing all the ways that you're disclosing it. And they highly recommend that you post every 990 on your website. And if not every 990, the 990s for the past 3 years. All right. And then you want to For those of you who want to expound on information, you can also describe information on Schedule O, and that will give supporting information for those things that might be questionable to people who, don't know about your organization. So you can explain anything that they might potentially have a question about. You can anticipate the questions that they may have and file Schedule O. All right, so basically, in summary, Part 6, Section C provides, an opportunity or to explain, how are you going to disclose, different documents. So like the 1023 application, your financial statements, the audited statements, those are subject to review. Um, how are they going to disclose, or how are you going to disclose the conflict of interest policies, the whistleblower policies, etc.? So the question becomes, what can you learn from looking at Part 6, Section C? You can learn a whole lot about an organization, right? You can get a sense, as I said before, for how well the organization is managed, how well the organization is in fact governed, whether or not they are truly transparent, right? If they're truly transparent, then they will have systems in place where this information is available on demand and they'll be able to disclose it. So things like your governing documents, so minutes, bylaws, if you need to amend your articles of incorporation, any board resolutions that you might have, financial documents like your financial statements, annual reports, your audited statements, conflicts of interest policies, your whistleblower policies, any other policies that the public might deem relevant, as well as your Form 1023, which is the application for tax exempt status. The next section is Part 7, and this is probably one of the most widely skimmed sections of the whole of the Form 990. Right? People want to get a really good understanding as to how much of the organization's money is going for compensation for key officers, whether or not you're paying money to any of your board members, key employees, the highest compensated employees, and the highest compensated contractors, right? So this is where you're going to list who they are, how much time they spend on the organization's work, and how much money you're paying them. So what can you learn from that section? You can get a sense for whether any board members or key leaders are getting paid over $100,000. So remember, they only have to disclose that for people who are making over $100,000. And again, it gives you a sense for how much time they're spending with the organization's work, how many hours per week, how much money comes from the organization itself, how much money is coming from affiliates of the organizations. And this applies not only to the people you have currently with you, but people who are former employees. So they want to get a sense for, ongoingly, what has been your track record for paying, key personnel. And the reason why that's important is, remember, when you start a nonprofit organization, there were questions um, that let you know what you can't do with the money, right? The money can't be distributed to your board members or key employees. So there's an inurement clause, which indicates that none of these people can be enriched. So questions in the previous section will answer questions that will help the IRS understand whether or not there are any insiders who are profiting off the organization, right? All right, so now Part 7, Section B, independent contractors. Here you're breaking out a list of any contractor that you paid more than $100,000 to, right? So you're going to have an opportunity to describe the services and then indicate how much money they were paid. And again, they also are going to want to get a sense too, what is the relationship between these independent contractors and your board members and key staff. All right, so what can you learn from this section? Again, what contractors were paid over $100,000, and then there are other sections that will help you understand whether or not these are insiders, to help evaluate whether or not there were conflicts of interest. All right, so remember on the first page, there was a summary of your financials. All right, here we get down to more, I guess, detailed information. So they're going to ask you questions, and you get this information from your income statement, right? So they want to get a sense for how much money you got in grants, how much money came about as program service revenue. Again, for example, if you are a medical organization and not only do you get grants, but you charge fees for services, they want to get a sense for how much of that money came in, right? So that's going to be categorized differently. Same for schools, how much money you got for grants, how much money did you get for tuition and fees and all that other stuff. Any other revenue. So example, if you got investment income, if there's miscellaneous revenue, any money coming in that's not a grant, not a program service, is not quote unquote an other revenue, then you put it under miscellaneous revenue. So all of that is captured here. So they want to get a sense for how much money is coming in and from various sources. So it might be things like your federated campaigns with the United Way and federal government, membership dues, fundraising events, related organizations, government grants, etc. Non-cash contributions, so in kind. So again, they want to get a sense for all of your sources of revenue here. So what can you learn by studying this section? You can get a sense for how healthy the organization is financially. You can get a sense for the funding sources and the funding mix. Are they more dependent on one type of funding than another? For example, are they too heavily dependent on government grants? Are there opportunities to expand foundation grants? You can also get a sense for whether or not they're augmenting their grant income with other revenue. Are they doing things to generate money other than grants? And also, what are their pain points? Are there problems? Do we see they're having problems raising money? All right, so then the next section, again, the summary, we talked about the expenses, just in general, we got a snapshot for the expenses. Down in this section, we're breaking out what exactly those expenses were. And when we talk about functional expenses, we're breaking them out by function. Is it a program expense, right? Is it a fundraising expense? Or is it an administrative expense? So here, any expenses that are program related, they go in this column. Any expenses that are administrative or management in nature go here. Any expenses that are related to fundraising go here, and the total is here. All right. So again, this is your statement of functional expenses, and you usually do this kind of statement every year when you're doing your audit. So as your auditor is preparing your statement of functional expenses, he's also preparing to lift that information from the audited statements into this particular section. So what can you learn from Part 9, Statement of Functional Revenue? Again, you can better understand the financial health of the organization. You can understand, too, where they're spending their money. Are they spending too much money, quote unquote, too much money on administrative costs, not enough money on fundraising? Are they not putting enough of their resources behind their mission, which is the money in their program. But you can get a really good sense for the mix of expense. All right, so the next section, so all of that information corresponds to your income statement. All right, the next part is your balance sheet. So whereas the income statement tells you how much money is coming in, how much money is going out in terms of income and expenses, your balance sheet is giving you a sense for your assets on hand. So you're going to be looking at your assets, your liabilities, and your net assets. And your net assets is assets minus liability. So all of that balance sheet information is going to go here. So they're going to want to get a sense for current assets. That would be things like cash on hand or any money market instruments, right? What liabilities do you have? Are there any short-term loans, any long-term loans? And then what's left after you take into account your assets and your liabilities? So again, you can learn the financial health of the organization. There's certain ratios that you can calculate, and we'll go into that, I guess in 2 more weeks when we talk about using Form 990 for performance management and benchmarking. But you can, get a sense for the financial health of the organization, how liquid the organization's assets are. And when we talk about liquidity, we're talking about, if you have assets that are not cash, right? How quickly can you turn them to cash? So if you had to sell them, how quickly can you get money for them? You'll understand how much cash you have on hand, your total assets, that is your short-term assets, as well as your long-term assets, your liabilities, short-term and long-term, and then your net assets. All right. Part 11, reconciliation of net assets, better known as your cash flow statement. So you want to, ideally, you should be able to work backwards from your income statement to your balance sheet. It's just like doing a bank reconciliation, but in this case, you're reconciling your income statement and your balance sheet, and that's going to also tell a different picture. Gets you a sense for cash flow for your organization. All right. So again, it's helping you to understand the financial health and the relationship between the income statement and the balance sheet, how much money is going on investments, long term, short term, cash flow, and all of that good stuff. All right. So we got Section 12, financial statements and reporting. So this lets you know the accounting method that you use. So remember, there's cash accounting, there's accrual accounting, and there's other. So when we talk about the cash method, we're talking about a method that lets you know how much money you have in your hand, how much came in, and how much is going out in real time. So very much like you manage your checkbooks. Your accrual accounting is a little bit different. It is recognizing income and expenses as they occur and not necessarily focusing on how much money you have on hand. So you can conceivably be, under the accrual system, income rich and cash poor because you have not yet received the money that was promised to you. If you have another system in place, you need to indicate what that is, and there's room to do that. But I will say that your auditor is going to put everything in accrual because that's a generally accepted accounting principle, and that is something, that's, I guess, a standard that's recognized across the board. So they strongly recommend using accrual accounting. And you can do QuickBooks and just press a button and tell them Do you want cash basis versus accrual? And you can run your statements that way, if you don't have an accountant. But if you've got an auditor or an accountant, 9 times out of 10, they're going to use the accrual basis. All right, so what can we learn from that section? We can learn the accounting method that was used. We can learn the level of independence in preparing the statement. That is, whether or not someone inside the organization prepared it, or did you have an independent auditor or bookkeeper who prepared it? Somebody who could be more objective. And then again, they'll look at whether or not it's cash accounting, accrual accounting, or some other method, and that will help them determine whether or not it conforms to generally accepted accounting principles. Before we go to the next section of the Form 990, I just want to share a couple definitions because, the IRS and the government are notorious for using terms that we don't always use every day. So you'll see a term excess benefit transaction, and basically that's a transaction in which an economic benefit is provided by an applicable tax exempt organization, either directly or indirectly, or for the use of a disqualified person, and the value of economic benefit provided by the organization exceeds the value of the consideration received by the organization. So if they're providing something that's worth more than the market value, right? Uh, if the nonprofit is providing a benefit that's at a premium, right? They want to know about it. So if you're giving something away to a board member or an employee, especially if it's above market value, they want that disclosed. um, Disqualified persons. That could be people who are substantial contributors to the organization. And in this case, is really referring more or less to foundations. So people who are substantial contributors, people who are foundation managers, owners of more than 20% interest of certain organizations. So it goes through a list of who is disqualified. So if these disqualified people are getting some sort of financial benefit from the organization, especially if it exceeds market value, that needs to be disclosed. And having those disclosures in and of themselves are not a problem. It's showing that they are uh, disclosing anything that could be a problem. However, if there's a pattern where you have a bunch of these transactions to disqualified people, it's going to look like you set up this foundation or set up this nonprofit not to enrich the community, but really for the benefit of the people who are running it so that they don't have to pay taxes, right? So again, the Form 990 is riddled with questions that help them to understand, what the interests are of people and whether or not there are any conflicts of interest. And we'll talk about that more when we talk about the ethics, how you can use Form 990 to determine whether or not an organization is an ethical organization. So here, Schedule L, so if you indicated in the main body that there's some excess benefit transactions, then you need to complete Schedule L. And here's where you disclose, you know, who that disqualified person is, or, that person who might have some interest, some financial or regulatory interest in the organization. You indicate what their relationship is, and you talk the about the transaction. All right, and then whether or not it was corrected. So they want to make sure that there's some correction. They also want to make sure that it was approved. They want to make sure that those transactions are not done in the dark. so to speak, between one or two insiders. So they need to know whether or not these transactions were, in fact, approved. So the same thing for loans, right? So here they want to know, who's the interested person, what their relationship is, the purpose of the loan. And this could be a loan from the person to the organization or a loan from the organization to an interested person. And then you want to know what the principal amount is and what the balance is. Is it in default? Was it approved by a committee? Um, was there a written agreement? So they're looking not only to see if there are transactions between interested people in the organization, but they also want to understand what the decision making process was. Was this approved by a group of people, by the whole board or by a committee, or was it just some transaction that could have been done in the dark between a couple of people? Having these transactions in and of themselves is not a bad thing. It's a questionable practice. It's not necessarily a bad practice. There are extenuating circumstances that can come up that requires that these kinds of these types of transactions occur. If they occur too often, then that's a red flag. It again begins to look like, this is a situation where the organization was not created for the benefit of the community, but for the benefit of the people who run it. And again, we'll talk about that more when we talk about ethics. All right, Schedule L, we're looking at grants or assistance benefiting interested persons. And again, they want to get a sense for, and especially for foundations. If there are people who work for foundations, you don't want to have a situation where they are giving money to people who work for the organization or contribute to the organization. So again, you're going to indicate here the interested person was, the type of assistance they got, how much it was, and the purpose. So, what can you learn from Schedule L? You can learn whether or not there are conflicts of interest and the extent of those conflicts of interest, and whether or not there's self dealing amongst the members of the board, self dealing amongst um, key contractors, key employees, and then the potential for the board members to gain at the expense of the organization. So, in conclusion, if your 990 could talk, especially behind your back, what would it say? All right. So, if you have any questions, feel free to post in the comment section. If you're a member of Nonprofit Utopia, we can continue this conversation in our online community. And if you're interested in joining us, you can go to nonprofitutopia.mn.co, and you can follow us on Twitter and on Facebook. All right. So again, if there are any questions, please post. All right. So it doesn't look like there are any questions or comments. I want to say thank you so much for your time. Thank you for joining us. And again, I hope you can join us next week when we're talking about, how we can use Form 990 for marketing purposes. All right. You take care. Bye-bye.